Ladies and gentlemen, good day and welcome to the CAPLIPOINT Laboratories Q4 FY21 earnings call hosted by Batlivala & Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Alka Katiyar from Batlivala & Karani Securities. Thank you and over to you, ma'am.
Thank you, Malika. Good afternoon, everyone. On behalf of B&K Securities, I would like to welcome you all for 4Q FY21 and full year FY2021 result earning conference call of CAPLIPOINT Laboratories Ltd. Today we have with us the senior management team including Mr. C.C. Parthiban, Chairman of the company, Mr. Vivek Parthiban, Chief Operating Officer, Dr. Sridhar Ganeshan, Managing Director, Mr. D. Muralidharan, Chief Financial Officer, Mr. M. Satyanarayanan, Deputy Chief Financial Officer, and Mr. Avnish Singh, General Counsel and Compliance Head of the company. I would now like to hand over the call to the management team for their initial comments. Thank you and over to you, sir.
Thanks, Alka. Thanks, everyone. Welcome to our earnings call, and I hope everyone is being safe wherever you are listening in today. We're pleased to welcome you all to our call. Please note that the copy of our disclosures are available on the investor section of our website as well as the stock exchanges, and also do note that anything said on this call which reflects our outlook for the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. With that, I would like to hand over the floor to our chairman, Mr. Parthiban, for the opening comments, please.
Good afternoon, ladies and gentlemen. I welcome you all to our investors call. At the outset, I wish you all stay safe, stay healthy and stay solvent in this unprecedented pandemic. Let us look at the scarce resource, the cash flow, which is the most important business essential in this pandemic. Our cash and cash equivalent stands at rupees 470 crore and the incremental cash in the parent company is 288 crore in the current financial year. Further, we also have orders on hand from the parent company to the tune of $22 to $23 million. Here, we confirm that we do have sufficient raw materials and capacity to complete the exports on time. Further, we have an advantage in exporting the formulation from China to Latin America whenever some of the raw material prices are high in India and low in China. Hence, exporting it from China to Latin America is a unique opportunity for CAPLIPOINT. Due to this pandemic, many local companies in Latin America are not getting the raw materials on time as they have to import the same either from China or from India. This again is an opportunity to CAPLIPOINT as we have our stocks closer to the customer, and you are aware that our stock and sale model in Latin America. Now, let me highlight our expansion plans in Latin America. We are registering our products in various parts of Latin, such as Bolivia, Peru, Chile, and Colombia. Shortly, we'll be starting our stock and sales business in this part of the world once the COVID curve flattens. We are also entering into the bigger geographies such as Mexico, in LATAM. We have received the emergency orders from Mexico and also exported few consignments in the recent past. Further, we received our first order from Brazil, which again is an emergency purchase. We also completed the agreement with a leading importer in Brazil, which will trigger the online approval shortly. We are further in the process of acquiring few products approval from a leading company in India for Mexico. We also initiated the new lines of marketing in the existing markets of Central America and Caribbean. The new lines of marketing are institutional sales and marketing of CNS drugs through doctors that we registered in the recent past with the help of our R&D. We give you a glimpse of the new projects. We are starting the oncology plan for OSG and injectable. The remodeling of the building is completed fully in addition to the design and detailed engineering. The tablets and capsule section will be completed faster, hopefully in 12 to 15 months. Our general OSD facility for regulated markets will also be completed in the next 18 to 24 months. Further, the API plant for US injectable and oncology are also in progress. In fact, we acquired the land in an industrial estate which is closer to our Caplin steroids. The tendering for the civil and mechanical work are in progress. Our plans to manufacture the API from key starting material will also make the company self-sufficient, as we do not have to depend on external companies or countries. Caplin CRO wing, Amaris Clinicals, the US FDA audit is expected shortly for the same. This will also help the company to do BEBA studies for many of our products in the regulated markets. Finally, we are also in the process of starting 2 more injectable lines in our Caplin steroids, details of which will be presented to you by the COO. You are aware that the CAGR in the last 10 years is 28% and above in terms of revenue, EBITDA, PBT, and PAT. We promised the shareholders in 2015 that our top line will become the bottom line in 2021, and we honored it. Today, our focus is on cash flow and investing the same judiciously for the growth of our company. I am confident that in the next 6 years, we are sure of creating a war chest of 1,500 to 2,000 crore, which will make the company a force to reckon with in the midst of the top Indian pharma companies. Thank you. Thank you very much. Now I request the COO to give his presentation.
Thank you, Chairman. I will give you a little background about what we have done in the US market, specifically through our subsidiary Caplin Steroids. So last year we have shown a growth of over 30% in the top line in our US business, despite all the challenges that we have faced during the pandemic. In 2 parts. One is many of the outpatient services in the US was stopped because of COVID hospitalizations. And as you know, injectables are products that are typically sold in the hospitals only. And number 2, the qualification of our second vial line was also delayed by about 6 or 7 months because of restriction with man and material movement within our states. But despite that, we have managed to show more than 30% increase in revenue. So we are quite satisfied with that, and we feel that the next year is going to be important for us because we are targeting cash flow break-even revenue. We also had 4 ANDAs that were approved in the last between basically January to April, which brings the total tally to about 10 ANDAs approved under Caplin's own name and 5 more approved through our partners. Of these, we have already launched 8 products, and we have already completed the manufacturing of the launch batches for the other 4, and the last 3 products will be planned for launch before October 2021. We've also had partnerships finalized for Canada, Australia, Brazil, and Mexico as well, as Chairman had mentioned. We hope that we can have some revenue contribution from these places in the next 18 to 24 months. Basically, any product that we are developing and launching in the US, we want to make it into a global dossier so we can extend it to other countries as well and have some additional streams of revenue from these markets. With regards to backward integration, so we feel that this is going to be an important differentiator for our company because with prices bottoming out in the US due to competition, what really differentiates between Caplin's offering and XYZ's offering is continuity of supply, which is very important for buyers in the US. So if we have our own API, then we can guarantee that any disruptions in our supply, and also when it comes to compliance, when it comes to confidentiality and all of that, even cost for that matter, I think we'll be very much in control if we had our own API. We are working in two different ways for that. One is on an inorganic route, and the other one is building on our own. And we feel in the next few weeks we might be able to come to a conclusion on that, and we'll be able to give you more information. Also, with regards to the front end, we are actively looking at the right timing for us to launch our front end in the US. As our chairman always says, what has worked out in the past for us, we should always concentrate on that and identify those patterns. And if you see in ROW markets, we are probably the only company that has an end-to-end presence, including the front end in Latin America. So that is what we are trying to achieve in the US as well. But timing, of course, is important. And we feel sometime in 2023 would be the right moment for us to start, because we feel that we will have more than 30 ANDAs under our belt that we can launch in our own label. And we are also expanding our capacity significantly with the activation of phase 2 of our injectable plant in Caplin Steriles. We are going to go for about 110 crore expansion, which will add 4 more lines, 2 vial lines, 1 lyophilized line, and a PFS line, which is a pre-filled syringe line, and also provision for another pre-mixed bag line. And the entire thing will be funded by the parent company. In addition to this, we are starting to get into more complex products such as emulsions and suspensions, both in injectables and ophthalmics, because typically this is a space which sees a lot less price erosion and stability in the market. It might take a little bit more time for approval and launch, but this will be much more longer lasting compared to very simple solution products. That's it from the regulated market side. I will just hand over the floor to our CFO to give you a little brief onto the numbers from last year, and then we will open up the floor for questions after that, please. Thank you.
Thank you, Mr. Vivek. Good afternoon, everyone who is on the call. This is Muralidharan, CFO of CAPLIPOINT Laboratories. Welcome to the call once again. At the outset, in the testing time, what we have all been going through, the last year has been very gratifying year in terms of performance from all fronts for CAPLIPOINT Laboratories. One, the revenue has grown. Operating revenue has grown by 23%, and for the first time we have crossed 1,000 crores in revenue, and 300 crores in PBT and 250 crores in PAT. This is a gratifying year for all of us, even though the year has been not all that smooth. That is one thing. Secondly, the last year when we were in the call, there were apprehensions about the gross margin dropping, PAT dropping, and the OPEX going up. All the impact of the subsidiarization been evened out, and I'm glad to say that we have gone back to the original levels of gross margin. We are at 55.6% gross margin current year, as against 52% for the last year. So the last quarter of last year was only 48%, as against that we are at 57% this year. And the impact of the pre-acquisition stocks, what we had in the last year, which impacted temporarily the gross margin level, has been evened out. We promised that the evening out will take place over the last year. It just happened. This is evident from the results what we are seeing. Secondly, on the expenses, OPEX, last year to this year there has been increase in OPEX by virtue of subsidiaries coming into our fold and a lot of people coming into our fold. With all that, even though the expenses have gone up, we have been able to deliver a higher profit margin, and we are at 24%, close to 24% to gross PAT level, which was about the earlier level. And also EBITDA margin, we are sure that we will catch up with that. The increase in expenses will definitely be absorbed by the increase in turnover in the coming year, and we will go back to the original levels of EBITDA margins and PBT and PAT levels. Secondly, on the balance sheet, you see our net worth is about 1,200 crores, which is 88% of the balance sheet size. Right? That means it is all earned profits. And on the asset side, 75% of the assets is in liquid in nature, in terms of inventory, receivables, cash and bank. Only 25% is in the non-current assets, which is the property, plant and equipment. That means we have a good leverage and in taking the company forward with the available resources. So these are the points which I would like to highlight as financial success, and we are open for any questions. Over to Mr. Vivek.
Thank you, sir. So yes, we can now open up the floor for some questions, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, to ask a question, you may press star and 1 now. The first question is from the line of Ashish Agarwal from Pareto Capital. Please go ahead.
Hi, good afternoon. Thank you for taking my question and congratulations on a very good financial year 21. So I had a couple of quick questions. One, I gathered that the Colombia stock and sale would be starting this quarter, and you'd be starting sales in Brazil and Mexico also shortly. So could you give some sense on the trajectory as to, by when Brazil and Mexico will start, and what kind of revenues you're expecting from these geographies in this year and the next?
Okay. I request Chairman to take this call, please.
Yeah. I mentioned that we'll be starting actually our warehouses in these 4 countries where we are currently registered the products. But at this juncture, it's not easy for us. But in the next 1 month, we will not be starting it. We'll have to wait for this actually COVID situation to flatten, COVID curve to flatten, which may take actually between 3 to 6 months also. However, we have already started doing some business in this part of the world. That's one thing. Second, as I mentioned in course of my speech, the business that we do now in Brazil and Mexico is based on the emergency orders, which will continue because the situation which you and me face today is also one of the same in Brazil and Mexico. At the same time, the registrations, as you are aware, it takes minimum of 2 to 2.5 years. But again, we will be in a position to launch our business at the earliest in Mexico, provided I feel that I should go there and understand the market scenario and then start the business. So eventually it all depends upon the COVID curve. We don't know when exactly it's going to flatten. However, the business which we do in other parts of Latin America will continue to prosper. Thank you. Thank you very much.
Thank you,
Mr. Ashish.
And just a quick follow-up. You mentioned a 30% YOY growth in revenues in USA. So if you could just quantify how much would we have done in USA in this quarter, and what is our expectation for FY22 from USA?
Yeah. With regards to the last quarter was the biggest one with regards to our overall sales contribution from the US. This year, our target is to achieve cash flow break even, and the visibility is already there for us because we've already launched 8 products, and as I was saying, the next 7 are going to be launched imminently. And with whatever forecasting that we've received from our partners in the US, we'll go very close to achieving our target of cash flow break-even. We feel that number is anywhere between 125 to 135 crores in the US.
Got it. Thanks. Just one last question. The oncology injectables plant, you've put it in a separate subsidiary. Any specific reason you chose to do it that way? I mean, are you looking at getting some investor on board over there, or what is the thought process? That will be all from my side. Thanks.
We don't expect any. Yes, thank you. We don't expect any investor to come into that space. But again, you are aware that there are some benefits in terms of income tax and other things. That's why we have spun it off as a subsidiary. Thank you.
Thank you. The next question is from the line of Ashish Kacholia from Lucky Investments. Please go ahead.
Yeah, congratulations, Chairman sir, and the entire Caplin team for working.
Sorry to interrupt, Mr. Kacholia, so your voice is not audible, sir.
1 second. Is it audible now?
Yes, sir.
Yeah. Good afternoon, Chairman sir, and congratulations to the entire Caplin team on a very good set of numbers. My question is pertaining to the regulatory compliances and the preparations that we have done for the US market and Caplin Sterile. Can you tell us what steps we have taken to ensure that we kind of remain on top of the compliance curve?
Yeah. Thank you, Mr. Ashish. Now, from day one, when it comes to our US business and the US plant where we are operating in, for us, compliance has always been the top of the priority. We've never really had a trade-off between deliverables and compliance or revenues and compliance or anything. We've always felt that the compliance has to be number one. And today we feel that quality and deliverables are two sides of the same coin. So right from the beginning till today, we've always engaged right from top down to make sure that we are engaged with our people, specifically our quality people, and to make sure we also have external consultants. In fact, we work with two former FDA inspectors that have had more than 25, 30 years stints in the agency itself to come and not only do mock audits for us, but also give us trainings both in terms of quality and also data integrity and other areas. We also try and make sure that we take people, because obviously when it comes to regulated markets, we need more talent from outside. So we also try and make sure that we take the necessary people from good quality compliance companies, because they will come with a good culture that will be easily blended with the culture that we have at the plant. And we feel that going forward, we are going into much more higher levels of automation, whether it comes to laboratory limbs that we are intending to use, and also going as close as possible to a paperless system over there, which gives adequate comfort level for any auditor to come and see. So we feel that our investment into this, EBMRs, limbs, and all of these softwares that we are getting into will also go some way to make sure that our compliance levels remains high.
Okay. And my second question basically is when you mentioned that we will do US business about 125 to 150 crores in FY22 and reach break-even there. What is the total potential output from this plant? I mean, what kind of capacity utilization will we be doing to reach 125 to 150 crores?
Yeah. So today the capacity utilization is a little bit of a misnomer for us, because number one, we are not doing only commercials from this plant. We also have a big number of products that we are doing exhibit batches for, because these are the ones that we are going to file ANDAs in the US. So, but if you were to put some rough numbers onto it, I feel that we are at about 40-45% utilization of capacities when it comes to purely commercial products. But we realized very quickly that because US is approving products much. So this is the reason why we are going for another doubling of our capacity. It will actually be even more than double when it's completed within the next 15 months. From current status, we are looking at around 105, 106 million units just in vials alone. And when it comes to refill syringes, we are looking at another, I believe, 15 million units. We are looking at 12 million in terms of bags. And ophthalmics will be another 10 million. Lyophilized will be 15. So all put together, I think we are looking at well over 160 million units from this plant.
Okay, this is just the expansion that you mentioned?
No, all put together will be around 160 million units.
After the Mr. Ashish, I would like to add few words with regard to the regulatory compliance. I fully agree with you. This is a very important area as far as actually US FDA facility is concerned. Compliance is part of a culture. And in fact, in the next one and a half year, I am moving closer to that factory. I am building a house next to it. The purpose is like this. As you are aware, culture is part of the habits of the people actually who work in the company. Integrity, quality, deliverables, all is part of actually the habits of the people that creates the character creates the culture. When I go there because of my age, I'll be in a position to understand the casual characters in my company. One good thing which I have done is this is closer to my village. The purpose of creating this facility is to help my roots. At the same time, I also understand either the people who work in my company have to love towards the company or I have to create a fear in them. If one of these are not there, the culture will not be established and will not be able to actually create the complaints which is needed for the factory. This I guarantee you, Mr. Ashish Kacholia, because you are a well-wisher, you are one of the leading investors of the company. Thank you very much.
Thank you so much, sir. And my other question is, this expansion will cost us how much money, and will we have to invest the entire money, or it will be invested in proportion with Fidelity Investments?
No. Yeah, please go ahead.
Yeah, so this is going to cost us around 100 to 110 crores investment. Because basically, this is the entire phase 2 of our injectable plant that is going to be completed. And because our parent company is sitting on a decent amount of reserves right now, from Caplin Steroids, what we are planning to do is take a line of credit from the parent company at an arm's length, and we are going to complete the capex. And but we are not expecting, or we are not looking for any sort of external investments for completing this capex.
Okay, so the equity structure will remain what it used to be. I think it's some 70-30, if I'm not mistaken.
It is 75-25, and it will remain exactly the same.
It will remain 75-25, and the extra capital will be in the form of a debt from the parent to the subsidiary.
Correct. Yes, absolutely.
Is that right? Yeah. Okay. And the total investment after this investment will be how much, including this 110 crores, what you're saying for the expansion?
You mean overall what has been already deployed?
Yeah, deployed plus this 110 crores, whatever.
Probably the CFO will be in a position to give a correct answer to it. Can I request the CFO to come and give the exact figure, please?
Yeah. The next is the total OPEX and CAPEX that has gone into this facility are still about, last year is about 400 crores. That of course, the net book value of the assets is about 125, 130 crores, right? So that is the amount that has gone into the fixed assets. If we add to that 160 crores of fresh investment, the property, plant and equipment will stay at about closer to 300 crores.
So 300 crores are already gone in. 400 crores are already gone in, and 100 crores more will.
Yeah. When we say 400 crores, that also includes the OPEX during the initial period.
Yes, the OPEX capitalized basically is what you're saying.
Yes, not capitalized. It is not capitalized. It is the OPEX absorbed by the parent company before it was hived off. Actually, we had an asset
400 crores plus 100 crores, so 500 crores. And what is the potential output or sales from this unit at full capacity?
Yeah, we wait.
Okay. So what happens is, obviously the US is a very dynamic space, and then right when we start the development of a project up until commercialization, it is not going to be the exact same numbers as well, right? So it's not very easy to look at what will be the output from this plant. But what we have targeted for ourselves, both internally and also given out in public, is that we are looking at achieving a revenue of around $100 million from this plant in 2025, 2026.
2025.
Correct. And last year we have done 90 plus crore, and this year if we are targeting around 130 crore, I think our trajectory looks decent. And with the expansion in capacities as well, we will be starting to look for some level of high quality contract manufacturing orders as well. So all put together, I think conservatively you can estimate that the revenue potential out of this plant that we've targeted is around $100 million by 2025-26.
Okay, sir. And my last question is there any opportunity for us to play in the contract vaccine manufacturing space, given that that is also an injectables kind of a manufacturing process?
Vivek?
Yeah. So there is a fund. Of course, you are absolutely right when you said it's an injectable product. But the fundamental difference is vaccines are coming under this category of biological products, and we do pharmaceutical products. So technically, both of them cannot be manufactured in the same plant unless you go for very high level of containment and all that, which takes time and quite a lot of investment as well. So as our chairman always says, what is measurable is manageable. When it comes to vaccine business, there is a lot of variables from outside. We don't have any control over the technology. We also don't have any control over the marketing of the product. So that's not some space that we are very comfortable with. We had evaluated initially because when it comes to the technology part of it, when it comes to fill and finish, I think we are very comfortable doing it. But everything else seems to be external variables over there. So we ended up not looking at investing into this space. And I also feel, and I also hear that there is significant amount of capacity coming in for vaccine manufacturing in the next 12-15 months, specifically in the Hyderabad, Telangana area. So I think there is going to be a little bit of a glut in terms of capacity available.
Fantastic, sir. Great numbers, and wishing you all the very best, sir. Thank you so much.
Thank you, Mr. Ashish.
Thank you
very much.
Muralidharan, again, I would like to just clarify in terms of the CapEx. Once the expansion is completed, it will be close to 300 crores in terms of gross block. When we say 500 crores, that included OpEx which we have incurred in the past. It is already funded in the books of CAPLIPOINT Laboratories. So assets that will be productive will be about 300 crores in terms of gross block.
Okay, got it, sir. Thank you so much.
Thank you. The next question is from the line of Siddheshwar from SVR Consultants. Please go ahead.
Hi, good afternoon, sir. I had a question regarding the new subsidiary, the Caplin Oncology. So you mentioned briefly that it's a new manufacturing plant and there are income tax benefits. So am I correct to assume that you would be paying, say, 15% since it's a new manufacturing plant?
Yes. I request CFO to take this, please.
Yeah. We want to avail of the benefit that is for new entities, and that is the major thing. And apart from that, also this being a focus area, we want to keep it as a separate entity as such.
Okay, clear. And another question regarding the subsidiary. So if I compare with, say, 5 years back, there was just one subsidiary, and now suddenly over the years, many new subsidiaries have been set up. So is there any strategic reason for that, and should we expect more subsidiaries in the future?
I request Chairman to take this, please. I request Chairman to take this query.
Yeah. If you look at the subsidiaries that you see now, these are all subsidiaries which have been taken over in the recent past, and these companies were all our marketing partners since Latin America. And so far, we have completed actually this one. The purpose of doing it actually is to have an effective control over actually our what we call supply and then distribution. Immediately, we don't have any plan to go for any subsidiary other than the one which you have mentioned in our press release.
Okay, clear. Thank you and all the best.
Thank you. Thank you.
The next question is from the line of Jitu Punjabi from EM Capital Advisors. Please go ahead.
Yeah, hi, good morning. Thank you so much for a great presentation and great numbers as well. So, sir, the two questions I really have. One is, your opening comments were that the focus of this year is going to be on cash flow. I'd love to, if you could give us some more color on how you would define success in measuring cash flow, and also in terms of, is it cash flow post capex, and what kind of goals are you achieving over there? And second is, if there are, what other metrics will you use to measure success or from an organizational standpoint 12 months from now, besides the cash flow point which you so well articulated?
Request Chairman to take this, please.
Okay. As far as cash flow is concerned, you are aware that this is actually the most critical mass which one has to achieve at this juncture, which I told you before. And this is possible mainly because of the fact that our business model is very unique. We not only manufacture and export, we also import, we distribute, we go for the last mile also, which is an end-to-end business model. If you look at most of the companies of our size, none of the companies have an importing model actually where you will have this kind of end-to-end model. That's one of the reasons, we are in a position to control our business, and that increases the cash flow, increases the sale. Today, as I told you in course of my actually speech, not many companies are in a position, especially the local companies in Latin America, they are not getting the API on time. They have to depend from India and China. That also opens up an opportunity for CAPLIPOINT. And third, what we have done now, the moment actually this pandemic started, we started increasing our stocks. If you look at the recent past, when we checked with the last year and current year, we increased the stocks to the tune of actually 10 to 15 million, mainly in Latin America. All these things, the more and more you export, that increases the possibility of more and more sales, which means more and more cash will be repatriated to India. This is as simple as that. There is nothing in the form of extraordinary marketing or sale. It's simple distribution, as we have created actually a stickiness factor in the bottom of the pyramid and the lower actually rung of the pyramid in Latin America. The people understand this is a product where they find the quality. They also see a good price in our product. We also give them the volume. We also give them the variety and novelty. Automatically, they come to our warehouse and buy. And there is nothing in the form of an intermediary, the manufacturer going to the last mile. That really helps us to have a consistency in top line, bottom line, and cash flow. It's as simple as that. Have I addressed your question?
You have, but just a slight tweak or follow on that. So you again, your opening comments were sitting on 470 crores of cash. Just if I were to take your cash flow discussion, that number will be higher 12 months from now?
No, please come again. I could not.
I will just repeat his question. So what he's asked is, we are sitting on around 470 crores of cash flow. What is the expectation for this year in terms of cash flow?
Yeah, that of course I will ask my CFO actually to tell you.
No, will the number be higher than 470 or just that static cash number on the balance sheet?
It is, yeah, that's why I request actually my CFO to give you the exact numbers.
Sure.
Thanks, Chairman. The cash balance as on last year is 470 crores. As you read in the press release, we also have plans to expand, one through investment into the oncology plant and the other through the API plant. This is all going to be funded through our own cash accruals, whatever we are carrying. And we expect a similar cash accrual during the year. We will not be able to put a number of what will be the closing balance at the end of 2022 because that depends on the project execution, how much of the cash what we planned will be absorbed in the current year. So what Chairman was trying to do is our focus will be on to increase the cash accrual so that we are always having free cash flow to take on further expansions, either organically or inorganically. That is the objective.
Okay, fair point. And my second question.
Add one more thing to that one.
Yes, sir.
The cash flow that you see today, more or less, it will continue the same way. Maybe if we don't have anything in the form of actually, the pandemic affecting our people. See, what is happening today is affecting actually one or two is fine. But if it affects below, that may also will not totally affect the business. It may be 5 to 10% this way, that way. So the cash flow will continue to remain the same. That's because of the fact, as I told you, we are increasing the export. We are increasing the sales. As and when you increase the sales, the places where the goods are going to actually stay, we will have opportunity to sell more. That means when you sell more, automatically, that has to become cash. Cash will be repatriated to India. So every time when we go for actually this kind of a cash flow, it has to be invested. If we don't invest also, the growth will not come in leaps and bounds.
Okay, fair point, sir. Sir, I have one more question. This Latin America growth, which has been a significant engine of your growth in the last 12 months at least, and even before that, do you expect the growth rates to sustain, or what is your thinking on that?
Okay, I'll give you a detailed report on this because I in fact told to my people. Today we are in the smaller geographies of Latin America. As I told you before, we are entering into the bigger geographies of Latin America. If you see the Latin American population, the Central America and one part of Caribbean, that is Dominican Republic, and then Mexico. So when we go to Mexico, that's a huge market. And we also know how to sell our products in the private market in addition to the tender business. That's where the big players are there. Okay, how are we going to compete the big players who have deep market? We will not try and compete with the products that they are concentrating. Their concentration is on chasing the economies of big products like anti-HIV, tuberculosis. But our focus will be more on 20-25 products. This will not be in the form of like 1,000 crores and 500 crores. But this 20-25 product, each one will be like 100 crores. I'm talking of the APIs. So if I can manufacture a key starting material to API and formulation and then register the product in Mexico and Brazil and the other part of actually the bigger geographies like Colombia and Chile, I still have an opportunity to compete with the locals, and the big players are not actually competing in this particular area. Even if they come into this space, my price will definitely be equivalent to their price, and their overheads will be much ahead of my overheads, which means they cannot actually place the price which will be cheaper than mine. This one reason. Second, most of the Central Americans and Mexicans are the one you will see in US. The Latins in US, mostly they are all from this place. And many of them in the next 5-6 years will understand. Already we know there are people who used to carry, which of course we don't entertain, but again it happens. The people who go from Central America to US, they take not only that pollo camporo, which is like a Kentucky fried chicken, they also carry some generic products because they want to help their own families, which is there in US. The same way I found them carrying our products. Once we complete our business in Mexico in the next 4-5 years, Mexico being the number one actually country from where the migrants have come to US, that will open up another avenue among the Latins in US in the form of our products. So that's why in the 5-6 years, not only we will sell the product that we are manufacturing in Caplin steroids, we will also sell our oncology product, we will also sell our tablet, capsule, ointment and other things, which means a basket of products with different buckets will open up a huge opportunity among the Latin population, which is in South America or North America. That's it. Is there anything you want me to add, please?
No, I think I heard you loud and clear explaining of how the whole strategy is going to work and how you're going to scale up and what are the strengths to scale up. But just would I be fair to summarize that you expect the growth rates to sustain? Is that a fair summary in a one-line sentence?
If I have to say, the one thing which I can't predict, which is an unknown to everybody, is the pandemic. If the pandemic actually is not going to affect one company, it will not affect me. If this is going to affect every company, it will affect me also. It is as
okay, fair point. Fair point. Thank you, sir. Really appreciate your thoughts and best wishes.
Thank you, sir. Thank you very much. Thank you very much.
Thank you. The next question is from the line of Nitin Gosar from Invesco. Please go ahead.
Thank you, sir, for the explanation earlier. Couple of points further. On the debtor days and the inventory part, how should we understand, since going forward we'll be having meaningful play coming in from US, how different is the debtor days and inventory cycle in US versus the existing business that we have?
Yeah, I will just answer the first part of the question. With regards to US, our receivable days is anywhere between 45 to 60 days. Today, if you see, our receivable days is sort of stabilized somewhere between the 80 to 110 days, depending on which part of the year you're looking at. So we are somewhere around 90, 95 days right now. As the quantum of business increases in the US and it's starting to become a meaningful part of the overall revenues, maybe you will start to see the consolidated debtor days, receivable days basically coming down for the overall company. But we are very comfortable at the current stage itself, as you could see from the cash flow surplus that we have, that even at 90-95 days, we're able to substantially increase our cash and cash surplus. So anything more specific on that, of course, our CFO can answer also.
Yeah. Further, if you could touch upon the inventory days as well.
I request Chairman to revert on this inventory basis, because we always feel that the inventory is a significant advantage for us. Our Chairman will give you a little bit more color on that.
As I told you before, there are two sets of companies. When you say inventory in the factory definitely is not a good sign to the company. Inventory in the market, especially during COVID times, is a boon. It's not a ban. The reason is, I already told you, raw materials are not coming to that part of the world because it has to come from India or China. And we are the only company having this warehouse model, and there are not many companies. And the inventory doesn't contain of 5 or 10 products. It consists of 300 to 500 products. That means you have a variety, you have a novelty, you are in a position to give at a very good price because you have removed the intermediaries. On top of it, if a product is sold in a market for 10-15 years, that's a guarantee for the quality. So when you can give good quality at affordable price, when you can remove the intermediaries, which is a very risky business model because you are removing the local, we faced all that. We faced all the physical risk. Today, we have become a force to reckon with in that part of the world. So the more and more we increase the goods inventory, it's better. But if you look at actually the press release, the inventory has come down on the contrary. It has come down to 179 crore from 238 crore. So this one, I would prefer the inventory to be on the higher side so that, the cash flow will be higher. For example, this first year, we have increased our cash flow to the tune of 288 crore. Incremental cash flow, compared to the previous year. That has happened mainly because of actually the goods next to the customer.
And one important point over here is there are three types of inventories, right? Number one is the one in the factory, the one on the waters, and then the one near the customer. For us, a significant chunk of it is on the waters and with the customers, like closer to the customer. So very little part of it, of course, the percentage-wise, I think CFO can describe. Very little percentage of it is actually work in progress at the factory.
Point taken. My reference was more to understand the perspective on US.
Yes.
Again, if we scale up, will it create more pressure on inventory that we carry? Like roughly today.
US, I will also give you one more information on this. With regards to US, there are two things we need to take into consideration. Today, 100% of our sales from the US comes from our partners, and our payment terms with our partners are anywhere between 30 to 60 days. Number one. And number two, we don't really keep any inventory in the US. So our business model is very conventional today. That is what we are looking to enhance by 2023 when we have our own front end. But today it is a conventional business where the products are basically made to order. right? So we don't, and these products are the ones that are going through hospitals, so we don't really have to stock up in the US. So you will not find any sort of pressure from the US business when it comes to receivable days. It will be quite the opposite, I would say.
Got it. So second question was pertaining to the ability to hedge the multiple currencies. As we scale up, the complexity in the business also gears up. And today that we are on the front end more, what are the revenues or what are the methodology we adopt in order to hedge ourselves so that the currency volatility for those countries which are at times pretty hard to deal with, that get managed well?
Yeah. I would request Chairman to take this, please, on the currency. I request Chairman to take this question on the currency.
Sorry, I didn't unmute. I'm sorry. Now, coming to the currency volatility, two countries where we are currently in Central America and Caribbean, three countries, Panama, El Salvador, and Ecuador, the currency is dollar. Then Guatemala is the country which gives us the maximum business. We do around 2.5 to 3 million per month, and the currency is very stable. And the only currency, even Nicaragua and other countries also, like Honduras, the currency has not been an issue in the form of volatility. The only currency which is not very bad, at the same time it's not stable, is in Dominican Republic. We fully know, we are aware of it, and the measures that we take it. See, if you supply the product in credit, if you give a lot of credit to your customer, yes, there is a risk. But if you keep your goods in the warehouse, whatever little risks you face in the form of devaluation can be offset by selling the products at a higher price to the same customer. So this is the answer I would like to actually convey to you.
Got it. And sir, last question is on the Brazilian market. The understanding there is that it's very difficult to crack, especially on the branded side. What I could gather right now, we are targeting the tender market. But as the time goes by, we would be also eyeing the branded market. Is that the right understanding, sir?
See, today, brand marketing, of course, we will get into brand marketing for products which are difficult to manufacture. Since you all know that, we are more into R&D and we are getting into more and more complex products. So when we market the complex products in South America, yes, we will definitely get into brand marketing. But the portion of sales will be mainly from generic, because right from US to other regulated markets, their focus is more on generics, because generic is a product where, they want the country to be benefited because of generics. When you go to a tender, it's generics. When you go to any institution, private, public, they expect you to supply generic. So it will be a mix of generic and brands. Our major portion will be from generic, and slowly we will build our brands also. Did I answer to your one more question you asked? I could not hear it properly. Please ask it.
No, this was the question, sir. And just a follow-up on this Brazilian market. Typically, what we see is that Brazilian market or Anvisa takes almost 4 to 5 years to approve a product. Is that the case with us also? Like, if we are in tender market, do we also see the similar challenge? Because the product approval process may be the same.
You're very right. The Brazilian approvals used to be long drawn process, but they have learned a very better way, during this COVID. There was no medicine. They had to suffer a lot. They had to go for all emergency purchase. So now they are slightly changing the policy. And you're also aware that Lulu actually has come out of the jail. So the elections are in the offing. And these people, when they change the government, and of course the present government also is in favor of completing the registration is faster. I don't know how fast it's going to be, but definitely not as bad as it before.
Yeah, just one point to add. For the first time, Anvisa has come out with a guidance that says that they might also recognize other countries' inspections on a mutual recognition basis, such as EU GMP and US FDA and stuff. So Both Brazil and Mexico, they are slowly starting to open up to accepting inspection reports from other countries, especially US and Europe.
Got it, sir. Right.
Thank you.
Thank you.
Thank you, sir.
Thank you. The next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Yeah, good afternoon, sir, and congrats for a good set of numbers. I had one question on Caplin Sterile. Hello?
Yes, please.
Can you hear me, sir? Hello?
Yes,
Please.
Yeah. So I had a question on Caplin Sterile. If you could just give us the breakup of the revenue between the licensing income and the income from sale of products. And secondly, if you could share the EBITDA and the PAT number for Caplin Sterile for financial year 2021.
I request our Deputy CFO Satya, because he looks at this closely. To the best of my knowledge, we are at about 60% product revenue and 40% in profit share and milestones. But I think Satya can elaborate a little on this.
Good afternoon. This is Satya Narayanan here. So as shared by Vivek, our export revenues in Caplin Steriles for the year was close to 58%. And the milestone and profit share contributed close to 42%. Mm-hmm. And for the full year, the PAT was negative 22.8 crores.
And what was the EBITDA number, sir?
EBITDA is close to negative 24 crores.
Okay, great. A second question regarding, there was a mention regarding another phase of capex being done in Caplin Sterile. And there was a mention that the parent company may stand alone. But if I see the FY20 annual report, there was 150 crores of cash lying in the balance sheet. And this year the loss rate, so we still, I would have believe, around 125 crores of cash in the annual report. So if we could just throw some light, why is there any further necessity of borrowing from the parent company?
So when it comes to pure operations, we are able to live within our means. We are self-sufficient with the investment that Fidelity has made into our company. But what happens is when it comes to additional capex, we are not able to afford it with the investment alone. So obviously, as you know, when it comes to R&D, we are one of the highest spenders of R&D in the country. In fact, I believe we are number one as a percentage of revenue. So, and we also have a very conservative policy of charging off our R&D expenses as well. So we need to be prepared for the number of products that we are filing and the number of products that are going to get approved. We learned a lesson in the last 18 months that US is also starting to approve dossiers quickly, and we need to be in a position for faster launches as close as it gets to approval. So we know that the business is going to grow, the volumes are going to grow, so we want to be ahead of the curve rather than be left behind a little bit. So that's why I think when it comes to pure capex, we are going to go for a loan from the parent company. But if it was going to be non-capex, regular OPEX, I think everything is taken care of internally by Caplin Sterile.
Sure. My next question, Caplin Sterile, is you mentioned in one of the previous queries that by 25-26, you're hoping that, we can achieve $100 million. Now, if you see the track record of Caplin, other than this US business, we have been in the range of 35-40% EBITDA margin and between I would say 50 to 70% ROC. So is that some sort of a number we also looking to aspire to achieve in Caplin Sterile 4 or 5 years from now when we reach $100 million?
Yeah, so if you take away our spend on R&D and filing expenses and all of that, Caplin Sterile's business is even today very profitable. I think gross margins, we are very, very similar to parent company kind of gross margins. The fact that we continuously invest into R&D is the one that is pulling down the numbers a little bit. And also, I would say that once we have our front-end presence in the US starting in 2023, we don't need to necessarily share the 50% or 30% of profit share that we give to our partners. The entire thing can be absorbed by Caplin Steriles itself. That will go some way to boost our bottom line as well. So we are.
I would like to add one more thing here, Vivek. As we told you that we are in the midst of actually starting key starting material to API for our injectable. So which means once you complete actually the API registration in US, that is DMFs, once you develop the DMF, then this also becomes an end-to-end model. You will have your own API, you will have your own formulation, you will have your own front end, which means there is no intermediaries. That's what actually will increase the profitability of the company too.
Sure. It will be fully vertically integrated when that happens.
Sure. My next question is regarding the 300 crores capex which has been mentioned in the presentation. So if you could give us a sense as to how much will be, what is the plan as of now to spend in this year and next year, and what is the timeline for commissioning of these three projects?
Yeah, when it comes to the oncology plant, this will be faster than the others because we have acquired 4 buildings from a bank. So the civil, which usually takes about 12 to 15 months, that has already been completed here because we acquired the building itself. So the oncology part of it, the oral solid dosages, we are hoping to have the first billing out of this within the next 12 to 15 months itself. And the second one is the API. I think if you're looking at a greenfield project, it is probably going to take about 2 years to be completed. If it is going to be inorganic, it will probably happen obviously much faster. Of course, we don't have clarity on that today. So we are going ahead with the assumption that there is going to be a greenfield project only. And number 3, the addition, basically the expansion of capacities in the injectable plant will be completed in 15 months from now. So the shorter answer to your question is this 350 crore will be spent over the next 24 months.
Sure. And what is the type of payback or incremental revenue these 300 crores could generate for us, like 600 crores of incremental revenue once fully utilized?
It's very difficult to say at this juncture, but that it will be many-fold. We don't want to give the numbers, to be very honest with you, because we are in the process of studying the market. There are 3 kinds of market which we address today. One is actually the ROW market, the other one is non-regulated, and then your US kind of a stuff. So I will not be in a position to give you the exact numbers on that, please, to be very honest with you.
Sure. And just one last question on the overall EBITDA margins. I believe that because of the currently lower profitability in the sterile business, there's some pressure on the EBITDA margins in the last 2-3 years. But right this year we are expecting much better improvement in profitability there. So can we see that in the next 2 to 3 years the EBITDA margins should improve from where they are currently?
I fully agree with you. Yes.
Yeah, we feel so. Yes, we feel so.
Okay, sir. Thank you and all the best.
Thank you, sir. Thank you very much.
Thank you. The next question is from the line of Mitesh Shah from ICICI Securities. Please go ahead.
Thanks for taking my question and congratulations for the continuously giving a strong result. My question is regarding to US sales. You have achieved around $12 million this year, and the next year also expecting around $18-20 million. And your expectations would be around $110 million. So when should you expect the flip in the sales and the key trigger for the sales? I believe one would be we are going into the front end without the partners. So when we can expect the paying out the triggers for this particular geography?
Yeah, so when it comes to the US trajectory, obviously in the beginning periods we've focused more on simple solution products where typically the sales and the margins are a little bit lower than some of the products that we are getting into right now, which is more into the injectable emulsion and ophthalmic emulsion suspension category and stuff. And in addition to that, we're also getting into pre-mixed bags and pre-filled syringes, lyophilized products and all that. So once these start to come through, we feel that there is going to be a significant fill in the next 3 years. So our revenue projection is based on this. And also in addition to that, like I was saying, once we have amped up our capacity, we are also going to be going for some higher value contract manufacturing as well with larger players in the US. That is going to improve our run rate as well. So while it might not be a very simple curve, it would be, I would say, rather in terms of steps rather than linear curve.
And to add one more thing, to tell you frankly, when a promoter is a non-technocrat, and in the initial days, it was not that easy to attract efficient projects heads and all. And most of the time, people won't accept. They don't know. They somehow actually create something. Then it leads to doing is easy, repairing is difficult. We have completed that process. What we have learned is one, when there is something bad happens, we learn from it. If something good happens, you grow. Now we have come to the stage of growth. Whatever happened in the past is because of actually the fact that every first generation entrepreneur has to go through that one if he's not a technocrat. So whatever has happened in Caplin is, if we are not in a position to generate enough cash, we would have been in trouble, because this has not happened actually by leveraging a debt. It has come actually because of the fact that we have a very good marketing setup in Central America. We generated enough cash. Then, of course, we attracted an investor. We were not very keen also in spite of it. Then we decided there is a concept called Capital Plus. In addition to capital, they also promised they would be in a position to help us when we go for the front-end marketing in US. So all these things have happened. Now we are very confident that we'll be in a position to do well going forward. We have increased the capacity. We are further increasing the capacity. Today the issue is not marketing in US. The issue was actually capacity constraint. That has been addressed. Then second, people constraint. Now we are in a position to attract good talents because we are offering the ESOP also to people. The share that's quoting 500 rupees, we are offering to the best of the best at 2 rupees. So with all this put together, we are very confident that we will actually get into the fast track. Am I able to give you the correct answer, please?
Thanks for the comprehensive answer, sir.
Thank you.
Regarding your backward integration, you said about you are making the API plants. So is that a pre-planning, or is any competition has increased and you are looking that would be the advantage for us? Is there any change in the competition scenario right now?
No, this is something similar to the business model of all big boys. If you look at all the big companies, they are not only into formulation, they are into backward integration. When they go for backward integration, they don't simply manufacture the API. Today, what is happening, you are aware that 70% of the API comes from China, which means your dependence on China will always be there. That to avoid that dependence, one has to go for key starting material, intermediate, API. Of course, formulation, we are the number one in the world, especially in regulated markets. It's not China. It's China, which is more into API, key starting materials, and intermediates. So it's not that, that we have done it just because the profits started eroding in the market. It is a plan based on what the big people have done it, and we also have to follow it with a difference. Difference is, since they have deep pockets, since they entered into some space already, it's not easy for us to go and compete there. That's why, as I told you before, we have decided not to get into the areas where they are very strong. We have decided to go for molecules which are not big. The molecules which are small are bigger, and we increase the numbers. When you increase the number, then we will also have an edge. That edge will give us actually a space for us to compete with any other company which is in the market. Can I address your questions, please?
Yeah, absolutely, sir. And one more about the Central America, Mexico, and the Brazil, where we got the emergency approval. So that would be a meaningful contribution, or also this emergency approval can be give a boost to the presence of us in this markets, Brazil and the Mexico, in going future.
Yes, there are two things which will happen. See, when some country is coming forward for an emergency purchase, if you can meet the requirement, that means you have done something which will convince the Ministry of Health that this is a company which has the capacity to actually supply so. For example, propofol is a product which creates huge problem in US market also. If you look at most of the companies which have registered propofol in US, right from the big company in Hyderabad, they manufacture it outside the country, somewhere in Italy. The only company, that is Pfizer, is the company which exports in a big way to US. That's propofol. This is a product which we have exported to Mexico. You have exported at least 5-6 consignments. The quality of the product is established. Now, people who have seen this product in Mexico, now they have actually come forward to place an order for Brazil. So that's an advantage that we see because the quality will be established. Second, the people who use your product, whoever is the company, which will also actually, the one which go in the form of word of mouth. Many people will come to know this company is in a position to supply a difficult to manufacture product to the market. So these are the advantages that happens. When this happens, that will also open up other possibilities of getting into the market.
Thanks, sir.
You want me to talk anything in addition to that, please? Is it okay or any other questions, please?
Yeah, absolutely. I'm fine with that. That's it for my end. Thanks for answering.
Thank you. Thank you very much.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, thanks for the opportunity. My question is, how much revenue are we getting from countries like Colombia, Argentina, and Brazil?
No, we are not. Colombia, Argentina, and Brazil, we have not started the business. Colombia registrations are completed. Argentina, Indian companies, none of the companies, 90% of the companies, except one or two, which have registered their APIs. Colombians are not in favor of Argentinians are not in favor of the Indian formulations. Brazil, as I told you before, we have completed actually the agreement that will trigger actually the online inspection. A. B. We have got an order for emergency tender, and we in fact we are mobilizing the API and other things to manufacture the product and export. I think Colombia, Brazil, and Argentina. I think I have addressed your question, please.
Yes. My follow-up question is, given the instability in some of these countries, how are we making sure that our receivables are not...
Sorry, I didn't process it properly. Can you come again, please?
Yeah. My question was, given the instability in these countries, in some of these countries, how are you making sure that our receivables don't get stuck and we don't experience any currency devaluations, potential currency devaluations?
I think I already answered this question once. I will repeat it. You see, it is true there is an instability in one country, that is Dominican Republic. The rest of it, if you look at 7-8 countries where we are present, 3 of them, like this one, like El Salvador, Panama, and Ecuador, the currency is dollar. Then Guatemala has been very stable. Even in times when Chilean currency and Brazilian currency took a severe beating, Guatemalan currency was stable. And there was little actually issue in Nicaragua, which is stabilized now. Honduras also is okay. But one more issue here is, if you give credit in the form of 6 months and 7 months, then what will happen? There is a possibility of your currency getting devalued. Even for 1-2 months, if you give, that can happen. Definitely it will happen. It's not that it will not happen. And how will you offset it? The way to offset it, you have goods actually in the local market, because we have a warehouse and we sell from the warehouse. Then the moment we find some products actually where the profits are little eroded because of the devaluation, we'll always sell actually at a higher price the next one and make it up. Because not many companies have registration in the form of 300-400 products, and there is no company of our size having a warehouse in the form of stock and sale model. There is no company from India of our size having registered 300-400 products. The big boys will not come to this market because these are all smaller markets. Generic business, the big boys will always go for actually huge countries like US or other countries where they will do tender business. So that way we are very uniquely placed in this part of the world, especially in the smaller geographies. So the currency, volatility of the currency has not affected in the past, and it's not going to affect us also in the future.
Okay, thank you. That's very helpful.
Thank you, sir.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal. Please go ahead.
Yes, sir. Sir, just with respect to the audit which you have highlighted in the presentation at the CRO, so is this to do with some product under shortage, and which dosage these products are?
The products that we are planning actually to do from our CRO is a mix of everything. And this will also open us an opportunity for us to create another CRO in Mexico. There are only 2 countries in the world where they expect the BEBA studies to be done in their own countries. One is Mexico, and the other one is Russia. The advantage of actually this CRO is we will keep the bioanalytical here, and we will only start the clinical side in Mexico. That's A. B, the number of products, we will not only do it for the regulated markets, we will also do it for markets such as Chile, Colombia, even 1 or 2 countries which are part of non-regulated markets. The advantage of creating a BEBA study is to prove to the doctor that the product is in line with the RLD. RLD is the innovator product. The moment you do it in an US FDA approved facility, that enhances actually the image of the company, that acts as an image building exercise. So it's a mix of everything, not only one actually in the form of going only for maybe emergency product or something. We will do that also. The priority will be given to an emergency product, but at the same time, in the long run, we will go for the mix, which will ensure actually sustainability to the company.
Right. No, I was referring to these 2 ANDAs which have been filed through partner where BAB...
Your voice is not audible, sir.
I'm referring to 2 ANDAs which have been filed through the partner where BAB studies have been done from the CRO side. So is this referring to some products under shortage that should prioritize US FDA to inspect this?
This is not a product which is under shortage in US. This is a difficult to manufacture product which has been given to us by a big company from Hyderabad. We used it, we have completed it, they already filed it. That will open up the opportunity in the form of triggering the inspection. So anytime we expect actually the inspection to be completed. So once you get the US FDA completed, you don't have to actually get the approval from many countries. Using US FDA, you can do the BEBA studies for registration. That's the idea of the whole thing.
Secondly, on this capacity utilization for sterile injectable site, wherein, because the pace of ANDA filings will definitely be higher at least for over next 3-4 years. So subsequently, we'll keep doing the stability batches. From that perspective, how do we see capacity utilization increasing for the commercial purpose?
Yeah, the commercial is going to increase more and more in the coming years for sure. Once I think we have filed more than 80% of the current pipeline, we will certainly reduce the number of filings, and then we will focus specifically on the difficult to manufacture products, 595(b)(2) kind of products, while at the same time strengthen our front end and back end also in terms of API supply. So I would say that in a short note, the commercial revenues by way of product supply would be much larger going forward.
Got it. And just lastly, one clarity on the Brazil market, where in the sense, other than the tenders, are we going to file the products separately?
Yes, we are going to be filing. In fact, we've already started with the first 2 products with the partnership that we have struck in the last couple of months. And we are not only focusing on emergency tenders. Obviously, our larger idea is to ensure that we have a presence in Brazil in the years going forward. So we are also filing products as well in Brazil, yes.
Understood. Thanks for this.
Thank you very much.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you everyone for taking part in our earnings call. And once again, we all hope that you and your loved ones, everyone is staying safe, and we hope to meet people in person when things allow us and when the pandemic situation is much more under control. Thank you very much for your interest in our.
Thank you very much. Thanks to one and all. Stay safe and stay healthy, please. Thank you very much.
Thank you. On behalf of Batliwala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.